Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television and radio, as well as on YouTube. And Carol, the massive rally that we talked about a little bit of an hour ago with you, well, it's still intact here. The S&P up more than 2%, the NASDAQ up 3%.
Yeah, just rolling over our highs, but nonetheless, as you said, holding out of their gains. And pick apart some of the sectors. I mentioned the stocks earlier. Those chip names, thanks to Qualcomm, up about 5.5% as a group. Home builders also charging ahead, Tim. They're up about 4% today. So beating the overall market.
Yeah,
for the
NASDAQ.
NASDAQ.
Buying homes?
What?
Are people still buying homes?
Apparently. Although there's a great story in the Bloomberg about Mr. Kissel over at PIMCO, right? Who called some of the tops
Mark
before.
Kiesel? I thought this was a great story.
Yeah.
Is he going to really sell his home again?
I don't know, but
Yeah.
he called the top before. All right, we digress. Tim, what do you got?
I was just going to say the NASDAQ 100 is, right now having its best day in more than a month. So we are seeing a difference in sentiment.
Wow.
Yeah.
Well, and
Is that not long enough for you, Romaine?
You're seeing at least a little bit of
Do you have coffee or
stability within the yield market. Perhaps maybe that's providing a relief here. It's actually finally a day, Katie, when we're not getting 10%, 10 basis point moves, of course, on a 2-year yield. Only about 3 to 4, and some big stability, of course, on the longer end as well, on the 20s and the 30s.
Yeah, instead it seems like all the action is in the FX market. I mean, we've spent so much time talking about currencies just today, and a 10% move on the Japanese yen against the dollar in the past month. That doesn't often happen in the currency market.
All right, a lot of earnings about to hit the wire shortly here, so let's get you through the numbers real quickly. Dow Jones Industrial Average going to finish the day higher by more than 600 points, roughly 1.8% as we wait for these numbers to settle. The S&P up about 103 points or 2.5%. The NASDAQ Composite is going to finish the day higher by more than 380 points or 3% on the day. Russell 2000 not to be left out here on the day, finishing higher by about 34 points or 1.8%. Intel earnings crossing the wire right now. We're taking a look at those earnings coming in right now on adjusted revenue basis for the first quarter, $18.4 billion. The street was looking for $18.3 billion, so a slight beat on that. As far as EPS, the number coming in at 87 cents a share. The street was looking for 80 cents a share. That's a beat, and the company reaffirming its full-year guidance for 2022. Shares slightly higher here or in the after-hours trading.
And really fascinating when you think about the huge moves that we just saw in Qualcomm as well, the big chip makers. Some of that at least trying to extend a little bit to Intel with that forward guidance. But of course, Carol, still off about 3% or so in those after hours. The market will bump around until it finds some stability.
Well, what we've been wondering, right? This is a company that benefited by all the PC demand during the, work from home, the pandemic plays. So we're curious about whether or not that's having an impact. I do think it's interesting and important that they are reaffirming their 2022 revenue guidance, as Romaine mentioned.
I have Amazon, Carol, so I'm going to get to it. Taking a look at first quarter net sales, $116.4 billion, slightly on the line of $116.43 billion that was expected. Looking forward, looking at second quarter net sales as well of about $116 to $121 billion. That's a little bit light. Analysts were looking for expectations about $125 billion. So really looking at some light numbers on second quarter net sales remain that go forward. Let me get to some of the AWS numbers. First quarter AWS net sales, again, big improvement here in the cloud, $18.4 billion versus estimates of $18.2 billion. And of course, Amazon coming out and is saying that really here second quarter operating loss to a profit, and help me through this, negative, a loss of $1 billion to a profit of $3 billion versus estimates of a profit of $6.8 billion. So that actually could be a big downside number when you look at second quarter, looking at a loss to a profit instead of big profit numbers being big declines here in some of the quarterly results after hours.
This is interesting commentary out of Amazon, too, when you start digging through the release. They still talk about some of the inflationary pressures out there. But I thought this was interesting. They say they're no longer chasing physical or staffing capacity anymore. They say they're now squarely focused on improving productivity and cost efficiencies throughout our fulfillment network here. So I guess you can kind of read in between the lines and figure out what they're talking about there. But obviously a company, still $100+ billion revenue company in a single quarter, but in one that's certainly facing some challenges going ahead.
So that first quarter operating income, $3.7 billion versus estimates of $5.4, and affecting that first quarter operating margins, 3.2% versus estimates of 4.7%. Let's do all of this with Poonam Goyal, our senior U.S. retail analyst here for Bloomberg Intelligence. And Poonam, we've given you a cool 5 seconds to digest the numbers. What really stands out to you?
I think two things. One, AWS continues its pace, so that's great to hear. On the online business, clearly in line with expectations, but the margin, as you talked about it, weak. You could say that that's surprising, but it's really not. I mean, from everything that we've been seeing all year, the supply chain crunch is only getting worse. It's not getting better. So they are getting hit from higher costs across the board. And that's what we're seeing in the guidance now.
Got to say, when I order things from Amazon, there are delays. Like, there are things that don't come like they used to. And we certainly see problems personally, anecdotally. What's interesting, though, then, Poonam, do we just say, we look at Amazon, even though it's down about 10% here in the after hours, do we say, okay, I get it. It's a supply chain problem. It's a very specific problem. Amazon, once things get better, will work it through. Or is there something else that we need to be concerned about here?
For the online business, the supply chain problem isn't going away anytime soon. It's not. But I'd say for Amazon, they have other things that are working very well for them. And these are businesses that are highly profitable, whether that's AWS or whether that's advertising. Those businesses are high margin business, over 50% on the advertising front. And we think that's where they can offset some of these pains that they're experiencing in retail over time.
They talk a lot in this press release, I think for the first time that I've seen with this type of breadth about their employee base and what they're doing, I guess, to, quote, invest in their employees in our workplace. We know, Poonam, that labor issues have been a big issue for Amazon now for the last couple of years. I'm wondering if you worry at all that it could actually have a financial drag on the company rather than just whatever public relations drag it might be having.
Yeah, look, I think Amazon pays decent wages to its employees. So on that front, they're protected. In terms of unionization and what we've seen come across at one of the warehouses, will that expand? Will that not expand? It's yet to be seen. Would the employees love to have a union? Yes. But does it hurt Amazon in terms of higher costs over time? Sure, absolutely.
But Poonam, to that point, they do have high turnover at these fulfillment centers. And there have been concerns in the past of them just essentially running out of employees. And I'm wondering if they're going to have to raise wages to the extent in order to attract and retain talent and keep increasing benefits in order to keep employees there.
Yeah, I mean, wages are definitely going to play a part in keeping employees there, but also productivity, right? What they talked about in the release from what you said earlier, is each employee actually operating to their best productivity? And is there a way to improve that with added technology enablers? And if they can do that, that they can boost productivity, and perhaps they need to look at incentivizing employees, not just with wages, but maybe with more holidays, more paid leave, et cetera, progression in their career. You know, those are things that are important to employees today and that employers need to keep an eye out for.
And this is turning into a real wipeout after hours. You can see Amazon shares down almost 8% at this point. Poonam, with that sort of setup, I mean, what would you want to hear from company executives? What could turn around this stock after hours?
I think they have to focus on their higher margin businesses. The stock is down largely because of the profit guidance. I mean, losing money, once again, even after having AWS contribute about 75 to 80% of their profits, is a big deal. So where can they offset these rising costs? Is there potential to offset them? How soon can we offset them? Those are the things that we'd want to hear.
All right, we are talking with Poonam Goyal, of course, of Bloomberg Intelligence, breaking down those Amazon earnings. Do you want to mention Robinhood, because they also came out with their results. First quarter net revenue, that's a miss, $299 million versus an estimate way above that of $352.9 million. Monthly active users, that's also a miss. They do say they are on track with their 2022 roadmap, which begs the question, what exactly is that, considering this week they've already talked about cutting, 9% of their workforce, and they no longer intend to provide revenue guidance. And the stock, if we take a look, it is definitely selling off here in the after hours, down about 6% here. Poonam, let's go back to Amazon. It's such a big company, such a big part of so many of our lives here. So what is it that maybe we need to see coming off of this earnings and maybe some of the investor concern in months to come here?
We need to hear them say that they found a way to lower costs. And I don't know if they can do that just yet. So that's going to be the biggest challenge ahead of them. They've invested a lot of money in logistics and transportation, but when will that actually pay off?
You talk about lowering costs. I mean, they just closed this deal for MGM. I mean, there are a lot of people that kind of scratch their head as to why they even have a streaming service to begin with. Is there a payoff that they get out of that streaming service, a tangible one, that you can see that justifies some of the costs that they spend on it?
I think over time, yes. I mean, these businesses, once again, if you're comparing Amazon's traditional retail business to any of the new businesses that they're investing in, whether AWS, whether streaming, or whether cloud, these are much higher profit businesses. So for them going after these higher profit businesses is going to help the operating profit line over time as they scale.
There was some conversation, and correct me if I'm wrong, hints of could you separate out AWS from the traditional sort of e-commerce side? And the answer was always no, no, no. The two work together to offset some of the losses. After this, do you rethink the way you start to ask those questions again?
No, I don't. I think that Amazon's best interest is to keep the businesses together, because online by itself, the profits would, be slammed essentially.
It's in Amazon's best interest. Would shareholders go along with that?
I mean, look, shareholders would argue a breakup of any big company, right, to monetize their assets. But I think overall, the bigger picture is still that these investments that they're making in these higher margin businesses will pay off. It's just a matter of time and scale.
Yeah, I mean, we certainly know some lawmakers would like to see that, Poonam. Another headline that we're getting, Amazon guidance is assuming that Prime Day occurs in the third quarter of 2022. How important is Prime Day in this day and age when it seems like, I don't know, every day is Prime Day if you're a Prime customer?
Prime Day is important. I mean, today's Way Day, right, for Wayfair. So it's just one of those days where you get the customers excited about getting deals. And third quarter is important because it's right ahead of the holiday shopping season. So they had moved it from 2Q to 3Q a few years back. And essentially what they're doing is taking the spend earlier, right? So if you're spending on holiday, typically in October, November, or really November, now you're spending it in October. And that helps.
Just to be clear, you said Way Day? That's what Wayfair has? That's like their version of Prime Day?
Yes, absolutely.
Okay.
And that's happening today.
All right. I did not know that.
Way to get on board.
I do want to point out that if you look at the QQQ after hours, that tracks the NASDAQ 100, down 1.2% at the moment, really just speaks to how big a company Amazon is, how important it is. And Poonam, we are hearing from Amazon CEO Andy Jassy that the company is focused on improving efficiencies in its warehouse and its delivery network. I'm curious, when it comes to cutting costs, do you think that's the right focus?
I think it's more about improving efficiencies. So where they're investing and where they're looking to enable technology to help make it more efficient is going to be important. And where the costs are rising is primarily in the logistics infrastructure area.
What do you mean, again, sort of by that big quote from Andy Jassy, where we're no longer chasing physical or staffing capacities? Does that mean no longer chasing up this labor market and the wage gains that come with it? Or is it physical capacity the stores? What does that quote tell you?
I would read it more as chasing the physical labor capacity. So they're trying to do more with less, right? And the only way to really do that is to make your processes more efficient. Use technology to help you drive better productivity. Because online sales volume is still growing or will grow at a double-digit clip. So you do need to be able to process these extra orders that you're getting, and either you do it with more humans or you do it with more technology.
I have a question about some of the, a real tiny part of their business, which is some of the physical stores that they've pursued, the Amazon Go stores and some of the bookstores. How committed are they to this idea of needing a physical retail presence?
I think they're testing and playing with the space. It's very, very small. They're playing with it. It's interesting. You know, they've taken away some of the tests that they've done in some of the smaller stores, but the Amazon Go store remains. And we'll wait and see what happens, but it's not something that we see them scaling in the next year in a big way where it will actually be needle moving.
They're still going through with the stock split, though, right?
Yes, that is happening.
20 for 1?
Yep, that is happening June 6th, I believe.
Hey, Poonam, our Spencer Soper on our MLive blog talking about worldwide shipping costs jumping 14%, almost $20 billion. Meantime, revenue from online store sales dropping 3%, revenue from third-party sellers increasing about 9%. He writes, inflation exposing the dangers of Amazon's low-margin e-commerce model. Like, I don't know, I sit at home and sometimes I'm like, how the heck do they make money when they're delivering me, you know, one little item every day and I'm a Prime member? I mean, does this model still work? Does it work in that it puts us into this Amazon infrastructure?
That's what they're trying to fix, right? That's what he exactly said. He said, let's make it more efficient. I order something from Amazon, 5 items, I get 5 different shipments. That's not practical, and that's not going to make them money. So how do they put that together and send it in one box? They need to become more efficient in the way that they process orders, because to your point, costs are up double digits. And they need to find a way to offset that. In the past, it was okay to ship 5 shipments because it wasn't that expensive. But today, it's become even more expensive.
Is it that they don't care or they just can't do it? Because even when you check that box that says, I'll take everything in one shipment if I want to wait a few extra days, it still shows up in 5 different packages.
Right.
To just later in the
I
week.
never check that box.
Well, I've learned my lesson now. It doesn't matter.
I always check that box. And,
Yeah.
and I think that's where they need to become more efficient. That just shows you the gaps, right? The low-hanging fruit that they have that they can easily fix to drive some of those margin gains.
Really appreciate it. Poonam Goyal, of course, senior U.S. retail analyst here for Bloomberg Intelligence, going to be sticking with us again up until 5 o'clock. Carol, big news out of Amazon.
Yeah, absolutely. Looking at the stock down more than almost 10% in the after hours. Intel's down about 4%, and we've got Robinhood down almost 8%, and we're getting ready for those Apple results. All right, guys, we got to run. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. Beyond the Bell. We'll see you again, same time, same place tomorrow.